PayPal, we have a bunch of news in regards to PayPal. I need to cover. A bunch of stuff came out this week, including their new logo, which is being laughed at left and right out there. People are like, really? Somebody paid somebody to design this? Oh my gosh. Okay, so we're going to speak about this. I'm actually going to share with you the shocking number PayPal likely paid for this new logo, which is going to be crazy for a lot of you guys to hear. Okay, a bunch of other new developments came out in regards to PayPal this week as well, in regards to ad campaigns, in regards to their partnership with Amazon, Shopify, things like that. So we'll speak about that in this video. Additionally, Andre posted this on his X. I thought this was very, very interesting. PayPal, he said, PayPal is dead serious about improving the company. I want to read you the story, essentially, that this gentleman posted in how actually PayPal engineers went on a call with him. Absolutely fascinating in regards to that. So react to that. Then I want to react to this one from Ed Denny. He went on CNBC a couple hours ago speaking about Fed cuts, where he sees the market going from there and those sorts of things. So I want to react to that. And then we'll react to this one. Goldman Sachs rate cuts was a bit of hedge for the economy. I'm looking forward to getting to that one. Appreciate y'all joining me as always. Thank you so much for being here. Thank you for smashing that thumbs up button, and thank you for being subscribed, which we are now over 50,400 plus subscribers on the channel. So I appreciate every single person that's subscribed here to the channel. If you enjoy my content, you want to support my content, do so on Patreon. That is going to be the pinned comment down there today. There's a tier if you just want to support, but there's also a tier if you want to see the stocks I'm buying and selling every week in that Fidelity account in there, as well as get access to that Discord chat. There's also a tier that gets you access to those two things, plus my Become Master of the Stock Market course. So once again, if you want access to that, there will be pinned comment down there. So listen, the new logo, okay, it is pretty funny. I mean, I got to be honest, as a PayPal shareholder, it is pretty hilarious. It's basically just big, bold, black text on like a baby bluish type background, right? Very, very simple, very self-explanatory. Like there's not a whole lot to it, right? Do I think this changes the game in regards to PayPal? No, I really don't. Like the fact that they changed their company logo from this to this, personally, I don't think it changes the game in regards to that. It's interesting, and just a lot of people are obviously laughing at it. This is one of those times logo really didn't need to be changed. Just, you know, I mean, everybody in general just kind of like laughing at the change here, right? And this one's saying, I'm starting to believe the CEOs of big companies are hiring their kids to make the logos. Yeah. Oh, gosh. So, in all seriousness, in regards to this PayPal situation, you might say, how much do you think they paid for this? Well, I was thinking like, oh, maybe they pay like $30K or something like that, or like $50K, like something like that, right? Well, from what I heard, right, Andre knows a lot about kind of the branding space and whatnot, and a lot of these companies in the branding space. What he was telling me is PayPal likely paid minimum $1.5 million for this, but probably closer to $5 to $10 million for this, which is crazy to me. But at the end of the day, I wouldn't be surprised. These companies, even if they spend 1.5 million or 5 million, it's such a small amount of money compared to how much they bring in, right? That it's almost like a rounding error. And so for them to spend 1.5 million on a rebrand like this, or 2 million on a logo rebrand, I wouldn't be surprised, right? It's wild, because you see it and it's like, that's it? Like that? And they probably paid millions of dollars for that? Yes, welcome to the world of business, folks. And so if you ever need some inspiration that you could be a successful entrepreneur in this world, just understand there's large companies paying millions of dollars to have black text put on a baby blue background. And yeah, you can make money in this world. Okay, folks? That's all I'm going to say about that. Unbelievable. Okay. Now, PayPal is doing a bunch of other, in my opinion, big steps in the right direction. And PayPal does a good job. This is just one of many changes Alex Chriss is making in regards to this company. We know that innovation is happening a lot quicker in regards to this company. We know that we're starting to listen to their customers, which we're about to get into in just a moment. But additionally, Alex Chriss understands he came into a broken stock, right? And then when you come into a company that has a broken stock, you have to get investors back on board. So he's doing these things, like he was at a Goldman Sachs conference here very recently. He also just released this investor relations newsletter, which I think is phenomenal. As we near the end of the third quarter, the energy inside PayPal is palpable. I can never pronounce that word right. Palpable. Our team is motivated and focused on execution. Our customers and partners are becoming increasingly excited about the platform we're creating, and momentum is building as we deliver for our customers in new ways. In case you missed it, here's some of the recent highlights. So we're ushering a new era to become ubiquitous solution for every type of customer, whether they shop in-store or online. And that's what PayPal's really pushing hard for. You know, if you think about Apple Pay's really pushed hard in not only people buying stuff through Apple Pay, right? Through like e-commerce, but also they've been pushing hard into the real world, right? Like, you know, you go to an actual physical store, you pay for your groceries, things like that. So PayPal's really trying to push much bigger, not just in terms of e-commerce, but in terms of in-store as well. They got the new ad campaign with Will Ferrell that you might already be seeing if you watch some TV out there and things like that. And I won't be surprised if they run a lot. My opinion is they're probably going to run huge advertising budgets October, November, into the beginning part of December. Why would they do that? Well, holiday shopping season. And so that's my thought. Holiday shopping season, PayPal's going to run ads very heavy going into the holiday season. So I wouldn't be surprised if they're big. The majority of their budget will probably come out in November. That's my personal opinion, right? Venmo is an important part of the connection we are building with our customers and their communities. We launched a new What's Your Venmo ad campaign to drive brand awareness amongst consumers and illustrate its utility beyond peer-to-peer payments. Venmo has a strong following, and we're building on this by expanding Pay with Venmo to new exciting merchants like AliExpress and Sony PlayStation. We believe that we are only scratching the surface of Venmo's potential, and we continue to focus on our customer-backed innovation to expand its reach. Yeah, Venmo, I really look at that opportunity as similar to, you know, obviously Meta is my biggest position, right? And Meta owns a lot of different platforms, but the three main platforms they own is obviously Facebook, then Instagram, and then WhatsApp. And Venmo to me reminds me a lot of WhatsApp in terms of Meta's just really starting to touch the monetization opportunity in regards to WhatsApp, and that's going to really be felt over the next 3, 5, 7, 10 years. That's the way I look at Venmo in regards to PayPal. I think that one has so much opportunity in front of it. We're striking partnerships to improve customer experience and expand PayPal's reach. PayPal is evolving into the platform of choice for the world's largest commerce brands, technology companies, and payment processors. We're expanding our reach by partnering with key players in ecosystems that enable us to bring seamless and connected experiences to hundreds of millions of consumers and businesses across the growing network. Today, we announced a new partnership with Amazon Buy with Prime for participating brands integrating the use to Buy with Prime API. PayPal is now available at checkout after shoppers log into their Amazon account. After starting next year, Prime members will be able to perform a one-time link to their Amazon account to their PayPal account so that Prime free fast shipping benefits are available automatically when they use PayPal while shopping with Buy with Prime on participating merchant websites. We're excited about collaborating with Amazon to combine speed and reliability of Prime delivery with PayPal's simple and convenient checkout into single experience on participating merchant sites. In early August, we launched Fastlane, our new accelerated guest checkout solution to U.S. merchants, making it available on Braintree and PayPal checkout platform, as well as through platform partners, including Salesforce, Adobe, BigCommerce, and Bold Commerce. BigCommerce, by the way, think of kind of like Shopify, but much smaller in regards to BigCommerce. Obviously, they announced the partnerships last week with Adyen and Fiserv, which is big. So, you know, PayPal, and then they announced also, this is about a week ago, we're also expanding our reach with PayPal Complete Payments, PPCP, our comprehensive global payment solutions for marketplace and platform comprised of flexible and powerful developer tools. For example, PayPal is now partnering with Shopify to power a portion of Shopify payments in the US. So the moral of the story is, and then Alex Chriss, as I spoke about before, on September 9th, he went and spoke to Goldman Sachs over there, and you can obviously view that if you want. But it's very clear to me, Alex Chriss is putting PayPal in a position now at this point in time where they're making sure they are partnered up with everybody that you want to be partnered up with, whether it's BigCommerce, whether it's Shopify, whether it's Amazon, it doesn't matter who. PayPal just wants to be in with everybody. They want to be friends with everybody. They want to be in with everybody, and they're moving fast in regards to these relationships. And they're just making it so the bottom line is PayPal understands, and Alex Chris understands very well, if the easier it is for people to just check out, to do payments with PayPal and Venmo, the more money they're going to make. The more checkouts they're going to have, the more fees they're going to be able to make off this, and it's success. And so it's clear as day he's doing everything in his power, and the team's doing everything in their power to position PayPal. So when people go to check out, it's like just automatic, like pay with PayPal or pay with Venmo. Like it's the simplest, it's the easiest, right? And that's phenomenal. That's what we got to see here. That makes obviously PayPal much more sticky over time, and that also helps mitigate the risk of like Apple Pay and all these other payment solutions and things like that. So I don't think there's any, I won't say I don't think, I know for a fact there's no one moving as quick as PayPal's moving now in the entire payment space. Apple Pay, Google Pay, Samsung Pay, what they're doing with Cash App, anybody, and there's a million other small competitors. No one's moving as quickly as PayPal has the past few months. No doubt about that. They're the creme de la creme. They're moving the fastest. They're innovating the fastest. And the great news is, Alex Chris, he hasn't even been at PayPal for a year now? It hasn't even been a year yet, if I recall. Imagine, when he has 2 years under his belt, 3 years under his belt, 4 years under his belt. I mean, my gosh, the way they're moving here it's pretty darn exciting. And so now I see why on the last conference call or two, he's been so kind of conservative in regards to like saying like we're still very early days in this, we have so much ground to gain, and I'm like, you guys are already making great progress, but it's clear as day to me that he views this as, no, we got a lot of work to do ahead, which is very, very exciting for a shareholder. Now, this is the type of stuff that really gets me jacked up. Oh, does this make me feel great? Okay. PayPal paid $400 for 30 minutes of my time, says this gentleman. Here's how. Last week I wrote a post ranting about how hard it is to integrate PayPal subscription flow into. A few hours passed and I opened LinkedIn to see how the post goes. I was swamped with notifications. PayPal's CPO and lead developer expert contacted me. They were interested in understanding why my experience was so bad and how they can improve it. A few days later, we set a time to do a Zoom call. Once again, Zoom call. Hint, hint. And I have to say that I was impressed. They scheduled 30 minutes of 10 engineers to be in the Zoom with me to listen to my problems, understand where did it go wrong, where did I go wrong, and ideas to fix them. Not only that, they gave me the email and number of a UK engineer to talk to if I encounter more problems, right? Now this stuff, oh my gosh, like this is everything. Because this goes to show you how, and we've seen Alex Chris respond to customers right through X before, where somebody will complain about something, like something went wrong, right? When you run a big, large company, like things are going to go wrong. And we see Alex Chris like say, we already fixed it. We got that fixed for you. We already took care of it. Like, hey, reach out to this person. Like he's already facilitating fixing problems like through X. And it's just a level of work ethic you aren't going to really see from many folks out there, that they're willing to, fix problems right through X, right through their own personal X page, if they have to fix it that way, right? And so the culture around PayPal, I could say this is one of the biggest culture shifts you've really seen with a company, a large company that is, maybe in decades. I don't know if we've seen, I can't, in my 15, 16 years now, in the market 16 years, I don't know if I've ever seen a large company's culture change this much, this fast. Where PayPal came across for years as a company that didn't care about their customers, the merchants, anything like that, right? Individual people. And now, in less than a year of Alex Chris getting on the team, it's clear as day he is driving this company in an ultra fast way to get folks to say, oh my gosh, like PayPal actually cares. Like they're actually doing everything in their power to make sure everyone's life is as simple as possible. Because like I went back to, PayPal's ultimate success is making businesses' lives as easy as possible. So then they want to integrate PayPal and Venmo into everything they do, right? And Braintree. Additionally, PayPal's ultimate success is so that average Joes, when they go to buy something, the easiest way possible is through PayPal, Venmo, right? And then everything else, as far as the ecosystem, will be helped from that. And so, man, what a change. Like, what a change. And I can't be more excited as a PayPal shareholder. Very, very exciting. Like, I had pretty high hopes for Alex Chris before I got to see all this. knowing that he came from Intuit, knowing his success that he had at Intuit and how successful of a company that is. But my gosh, like really starting to see all these things go in action. I'm like, oh my gosh, like he might end up creating the next Visa. That's what you got to understand about that PayPal. This might end up being the next Visa in the making, but maybe even more powerful. If he keeps moving this fast over a 5 or a 10-year span, oh my gosh, you know how big PayPal is going to be 5 to 10 years from now if Alex Chris is going this fast? Imagine what it's going to be year 2, year 3, year 4, year 5. Like, oh my gosh, like things start to compound on themselves, right? So imagine the products and services, the relationships, the partnerships that we aren't even seeing today, right? That might come in future years. And I've seen PayPal's, debit card product, credit card product. I think they could push even further on that if they want. Like, who's to say PayPal couldn't give 5% cash back to everybody for every purchase? Like, could you imagine they did something like that? It might not be the best margins, but oh my gosh, like if you could have a credit card that had 5% back on everything, like, oh, like no one's doing that. Like somebody might offer 4 or 5% on certain items or things. Imagine if you just did 5% blanket everything. Oh my gosh. And then you ran an ad campaign around that. Imagine the market share they would steal from the traditional banks. Because, I mean, most credit cards, you're usually going to get 1 to 3% back on for purchases, right? Let's say they did 4% on everything or 5% on everything. Who's managing that? Even a lot of Amex. Amex is usually seen as kind of the creme de la creme when it comes to a lot of their give back and whatnot. Even them, Discover, oh man. But that's the thing, PayPal's got a lot of different ways of making money. They don't just have to make it on those interchange fees and things like, oh my gosh. Like, so anyways, PayPal. I love the way things are going, and I can only imagine where things are going to be in a few years from now. Very, very happy shareholder, I can tell you that. It's very exciting days there. Fed's rate cut may spark a melt-up, says Yardeni Research at Yardeni.
President of Yardeni Research. Welcome back. It's good to see you.
Thank you, Scott.
By the way, I'm drinking one of those Coke Zeros that's Oreo. Have you guys heard about that? I don't know if you guys have heard about this, but it's a Coke Zero Oreo. And it's so weird drinking it because it does actually have the aftertaste of an actual Oreo. It's kind of freaky.
You've been talking about the idea of a potential melt-up. Did the Fed just initiate that?
I saw it at the store and I was like, I got to get that.
I think they did. I don't think that 50 basis points was really necessary for the point of view of the economy. The economy is growing about 3% on a year-over-year basis. Now it could grow at a faster pace as a result. But I think the result is going to be productivity gains that are more than we've had of late. And if that's the case, it'll show up in earnings. So from an earnings standpoint, I think we're okay. It's not irrational exuberance. But the valuation multiple stretched. It's up around 21 right now on a forward PE basis for the S&P 500. The Buffett ratio is 2.8, which is near record highs. So I would have preferred to see the market kind of go sideways for a while, but the market never listens to me, and it just keeps going up.
I mean, how much do you think it can go up now?
Well, the way I forecast is I have a base case and then 1 or 2 alternative scenarios. And in my base case, which is that the market follows earnings and valuations don't get too much stretched from here, I would have the market going to 5,800. We're almost there. I mean, we could be there by next week sometime.
So when you're running, I'll show you this here. So whenever you're running projections for a stock, because you just heard Ed Yardeni talk about, well, when I try to figure out where I think the S&P 500 is going, I have my base case and I'll have 2 other scenarios. How I do it through 1000xstocks.com is I create actually 5 different scenarios when I go to kind of try to figure out where I think realistically a stock's going over time in regards to their revenues, net incomes, things like that. So let's say I'm doing PayPal through 1000xstocks.com, right? I'll run like a base case. So a base case for PayPal might be something like this is just supposed to be like conservative, like this kind of like a sleepy numbers, right? So I might run like an 8% projection on revenue growth per year, 12% net income growth, and then I might run my PEs at like, kind of 20 to 30 range. So very, very conservative here in regards to this, right? So if we run that on PayPal, we're going to get kind of a 14% compounding annual growth rate, assuming I bought shares here today, which obviously my cost base is a lot lower, but assuming I bought shares today, it'd give me about a 14% on the low end compounding annual growth rate and about 26% on the high end, which is significantly above where the market's usually going to do compounding annual growth rate rise, right? So pretty good, but I'm not just going to run that one scenario. From there, I like to say, okay, what's a realistic bullish scenario? So a realistic bullish scenario for PayPal, I might run like a 12% revenue growth rate and like a 15% net income growth rate, right? Then let's say I say, okay, what's kind of a realistic bearish case scenario? So for that, I might run like a 5% revenue growth number on average per year over the coming years, right? And let's say net income growth of like 6% or 7%, something like that, right? Which would be pretty bad for PayPal over the next few years. Then I think about what is an ultra bullish scenario. So for that, I might run PayPal at like a 15 or an 18% revenue growth rate on average per year, right? And then I'll run my net incomes. I'll adjust all my net incomes to like a 20 or 25%. And then you're going to be able to command a P probably in the 30 to 40 range at that particular time. So I'd run that, right? And then I say, what is like a doomsday scenario for PayPal, right? Like the business isn't doing well. Plus, let's say you have a recession, a major recession in the next few years. And so I might run PayPal at like 1% revenue growth, which would be absolutely a complete disaster for PayPal. So I might run like 1% average revenue growth over the coming years and like 1% net income growth, which would be horrible, right? And then I might put my P's at like 15 to 20. Be a disaster. So then I get my results. So I run 5 different scenarios whenever I do a stock, and it doesn't matter what stock it is. I always run 5 scenarios. My base case, and I'd rather be a little conservative in my base case, my bull case, my bear case, my ultra bull case, and my ultra bear case. So I have 5 different scenarios, and then I can look at the stock and I can say, okay, that's my base case, and like, here's if things go really well, here's what I could see happening, here's if things went really bad for this company, here's what I could see happening, right? And then you're kind of prepared mentally for whatever does happen, whether that stock goes up a ton, down a ton, whatever happens to the revenues, you already kind of pre-planned for it, which is beautiful.
But I think in a melt-up scenario, which I just raised the odds from 20% to 30%, sort of a 1990s deja vu all over again scenario, I think we could see over 6,000. And then maybe that'll set us up for a correction early next year. I don't think it'll be a bear market because I don't think we're going to have a recession.
Wow. Does it change in any way what can go up?
Wow.
The kinds of stocks that maybe I need to think about 50 rather than if it were 25?
Yeah, I think the market's already kind of thought that through, and it's kind of given us a pretty strong indication of what this inflection point, this change in Fed policy means for the market. What it means is broadening. We've been thinking it would be broadening there for quite some time, and I just kept focusing on the Magnificent Seven. But I think we have seen in the past few months that the market has broadened out to the small cap and mid cap. So their valuation multiples are starting to improve. Look, I think that the trade here is to really broaden out the S&P 500. In other words, focus on the S&P 493. I still have a problem with mid caps earnings. They're just kind of still in a coma. They're flat. And I haven't really seen things pick up. Maybe with lower interest rates, that'll provide some lift, but I see more opportunities in the 493.
We'll leave it there. Good weekend. We'll see you soon.
Thank you.
Edward, Denny, thanks so much.
So I have a lot of doubts. About S&P 500 6,000 this year. We heard Edward and Denny talk about that there. The man from PML Capital I reacted to earlier in the Palantir video, right? He was talking about 6,100 by year end. I have a lot of doubts about these 6,000 targets for end of year. But let's say it does happen. What are my plans? If this S&P goes 6,000 plus this year, what's my plans in that scenario? I would, if that happens, I'll take quite a bit of profits. I'll be honest with you guys. I'll take quite a bit of profits. You'll see me, cash out a good amount of shares in a lot of stocks. You might see me build some cash levels. You'll see me build some hedge levels, definitely up in the fourth quarter of the year. You're going to see that regardless of kind of where the S&P goes, whether it's 5,500 or 6,000 or 5,750, whatever. But I can tell you, we go 6,000 plus, I'll definitely hedge up going into next year because I'll be concerned. That's another big move. I mean, we're at 5,700 or so right now, or if not under 5,700. So to move to 6,000 plus in the next 3 months, it's only 3 months really left in the year. come on, like that's a big move. So, yeah, I would be forced to cash up. I really would. I would have to take some pretty good profits on a lot of stocks. Anybody say, would I be scared of from a tax angle? No, because I'm good on taxes for at least the next year or two because of the chef loss, a couple of years ago, right? The chef loss was so big that I have that as kind of a, let's call it to write off any gains against for at least the next 1 to 2 years. So I'm 0% worried about taxes for the next 1 to 2 years. After 2 years from now, then I have to start thinking about taxes again and kind of considering that in. But for the next, bit of time here, for the next 2 years, I'm good as far as that goes. So, yeah, we'll see. All right, Goldman Sachs. Rate cut was a bit of a hedge for the economy.
After yesterday's post-Fed rally, my next guest says now's the time to bet on stocks and use volatility as an entry point. Joining me now, post-9 once again, Sarah Nace-Terrano of Goldman Sachs. Nice to see you.
Great to be here.
So how do you characterize what happened this week for the market, that it was 50 and not 25? Does that change the way you would have seen things today?
I think it changes it a little bit. I think the Fed has done a great job. They were very focused on inflation. They got inflation under control into the 2% range. High twos, 2.9 is where we're trending right now. And now they're focused on employment. And I think it's helpful to the equity markets, clearly, to have rates lower. I really think that it was a bit of a hedge as well, right? We're not having another meeting until November.
Like insurance.
We've got insurance, 7 weeks, and I think, you would expect equity markets to rise on the back of a 50 basis point rate cut.
So you think this was more of a gift than a warning, a worry point? That's something they had to do 50 because they're more worried about the labor market than the economy falling?
Look, I think a little bit of both. I think they're a little worried about the labor market, but I do think I see it more of a hedge than a trend that we're going to see all these, 50 basis point cuts going forward. I think they've given themselves a really nice hedge for the next 7 weeks that if the data comes in worse than expected, we have enough cushion to really be able to, handle that.
What about areas of the market? As we spent the first 20 minutes debating kind of where you want to be.
Yeah, if economic data comes in weak for the next, several, let's call it the next month or so, right? Next 30 to 45 days, and the Fed has more ammo in November to do another 50. Now, let's say economic data looks really good. Then Fed might only go 25 come November. That's a potential. But if there's anything worrying or, somewhat troubling, weak economic data-wise, I think they'll do another 50 in November. And that was what I always suggested they do, right? I told you guys I think they should do 50 and 50. That would put us down to 4.25 to 4.5 Fed funds rate going into 2025. And then let's see, how is the holiday shopping season? How are consumers looking? How's the economy looking? Where's unemployment rate come January, February? And then we can make decisions. Do we want to take it down to start doing 25 basis points of cuts? We can do that then at that point in time, right? Let's say holiday shopping season looks really weak. Numbers were bad, right? If that's the situation, then Fed knows, okay, if people aren't spending money in the holidays, then, it's a little troubling sign for the economy, and we probably need to go another 50 basis points come either January, February, right? So that's the way I would look at it from the Fed. Get us down 100 basis points exiting this year. And then let's see how holiday shopping season comes in. Then we can figure out, do we want to go 25 at that time, tame it down, or do we want to keep doing the 50s? And if, like I said, data's weak, keep going 50s at that point in time. We still have such a massive spread between where Fed funds rates at. Even if we exit this year 4.25 to 4.5, we still have such a massive spread between that and CPI. CPI is going to likely keep going down. You could see a CPI from the government numbers under 2 in the next few months. As a potential, that's like a realistic potential. You see a CPI under 2% in the next few months. And so if all of a sudden, next thing you know, you're down to, let's say, a 1.9 on CPI, which Trueflation has us at like 1.1% numbers recently, right? Which I trust their numbers more than government numbers. But let's say you're down to like a 1.9% number CPI, and you're at 4.25 to 4.5 for Fed funds, you're still in massive divergence. You're still way too restrictive there, right? So a little food for thought in regards to that.
And whether that's become a game changer too as a result of the 50. How do you see that?
Yeah, I mean, a little.
I say that food for thought too often. Somebody in the comments for my video earlier said every time I watch one of Jeremy's videos, My thoughts are so full of food. Oh man, that was too funny.
I'll just take a step back. I mean, when we think about advising, high net worth clients and family office, what is the goal? The goal is to protect their money and grow their money to outpace inflation. That's how you protect purchasing power. What does that better than anything? U.S. equities. You go back and you look from 1926 at rolling 20-year periods. U.S. equities have outperformed inflation 100% of the time.
Yep.
Now, what U.S. equities, I think, is the question that you're asking. And I would say we've been talking about broadening for a while. It's hard to ignore, the mega cap tech outperformance. We wouldn't bet against it. I think it makes sense to have those exposures in a portfolio, particularly because most of our clients have tremendous gains there, and we've talked about the tax consequences of taking those gains. Mm-hmm. But 11 of the sectors of the S&P are up year to date. The broadening is happening, and now it's like, where do you look to add extra exposure? We're starting to talk a lot about mid-cap, and I think the thing that's interesting about mid-cap is from sort of a price perspective, they trade at, 15 times next 12 months versus the S&P at, 22 plus. And then you add to that, that they are profitable companies for the most part. 90% of them, have positive net income. And, we have positive earning estimates too. So we see a CAGR of 11% over the next 2 years versus the S&P at 7%.
What about
I like her. You got to understand, she's the private wealth global head of capital markets for Goldman Sachs. So she's going to be talking to very high net worth individuals. And when you're talking to very high net worth individuals, you better be on your game, because I don't want to say all those folks, but there's a good amount of those folks are really on their game when it comes to all this. And so if they feel they're much more knowledgeable on this and everything than you, and you don't have your stuff together, you think they're going to have you manage the money? Of course not, right? They're going to say, oh gosh, these people don't know what's going on. So I like somebody like her. She's got her data ready. She's got all these plans, and here's what I think is going to happen. I like that.
Are different. I mean, as you said, it's about preserving.
I agree with her, but I like it.
What about stepping out on the risk curve? If you think that the Fed's going to be more aggressive than maybe we first expected, does that change that dynamic for you?
I think it makes us more and more comfortable with equities. I don't want to ignore where we are, though, today. We have hit new highs on the S&P this week. Mm-hmm. We are going into the election in November. October is typically a historically volatile month. So am I running into the equity market here? I am not. Am I telling clients to continue to hold equities? Yes. And to look, and you mentioned this at the beginning, look for dislocations to add exposure, taking advantage of increased volatility, selling puts on names that you really want to get long, or selling puts on indices that you want to go long. So I think we're trying to think about how to use volatility, and we did that on August 5th as well, by the way.
Very nice. Alrighty, guys, appreciate you joining me as always. Much love. If you're looking to support my content, plus get access to see the stocks I'm buying and selling every week in that Fidelity account in Patreon, then you can click the pinned comment down there and join us on in there. And once again, you get access to a Discord chat that's in there as well. And then the other tier, additionally, is for if you want access to all that, plus get access to my Become Master of Stock Market. There's that one as well. Plus, there's the one if you just want to support and you don't care about access to that. Okay. All right, guys, much love and have a great day.